Professor Wolff, the last of the so-called stimulus package coming from the U.S. Central Bank to bring up the growth of the economy. This is going to be one of those moments that you see stimulus policies are not necessarily important anymore for the U.S. economy, is it?
Well, I think that might be what some folks hope for. I'm not sure the economy is quite as strong as those predictions had supported previously. We've seen some pretty weak numbers. So one is we really haven't gotten sustained or meaningful wage growth. And that's a big issue because the kind of big pain of the Great Recession that began in the United States in 2008 is still in effect in many households and many regions. And the only way we'll begin to see that is with better wage growth. We've had employment growth, which is good, but the employment growth hides the fact that there's a lot of people have exited the workforce altogether, so we don't count them. So we still have a good amount of pain out there. We still have a lot of stimulus. I think the bigger question for the Federal Reserve and what will be the concern that people pay attention to is, are they still going to do 2 more rate hikes this year? And what are they going to do about that balance sheet? How quickly do they start to draw down, maybe make a meaningful reduction from the $4.5 trillion in assets now toward a significantly lower number in the next few years?
Those are terrific questions, but maybe it could be helpful if we take a look at some of the latest history about how the Federal Reserve has been acting over the months and years. How has the Fed changed the mechanics of the monetary policy? The Fed has successfully carried out 3 rate increases. Can they now effectively control interest rates without draining the reserves? That question was also being raised by Professor Wolff. For now, Professor Liu, what do you make of it?
Well, actually, they look at 3 dimensions, whether the economy can really be steered on a steady growth, however slow it might be, but it won't really be reversed. Number 2 is that whether inflation can really reach the target of 2%, because they believe that this is the best leverage point, and also the unemployment rate. So it's really, I do very much agree with Professor Wolff that the picture is rather mixed, because the economic growth is not that high, and also there is also a signal of reversal. The pay raise is not really as high as expected, and also a lot of temp jobs are really worrisome. People do have jobs, but they worry what's next after 2 months or 3 months of term employment. And then the inflation. So inflation is rather resilient, but you also notice another signal that the trade imbalance is getting widened. So there's pretty much a mixed signal.
It is mixed signal, particularly politically, Professor Wolff. It is no secret that Washington right now is having a huge dogfight after President Trump comes into the office. That, of course, brings a lot of unpredictability and instability to the growth expectation of the U.S. economy. Particularly, some of the key economic policies will not be able to be decided now, not to mention implemented. So, Professor Wolff, at this point, what do you think should be the role of the Federal Reserve? How do you, as an economist, expect them to react and act?
So it's a great question. I think the Federal Reserve sees itself as sane, steady, and consistent in an economic policy environment that's unfortunately not sane, not steady, and not consistent. So being relatively more stable, more predictable, is even more important for the Federal Reserve now than normally because of the political unpredictability of the present group in Washington and of what they're going to achieve. So normally we have some visibility on fiscal policy. The Trump government has been bold in making pretty massive suggested changes to international relations, tax structures, and basic regulation of many, many sectors of the U.S. economy. However, it seems to have dimming prospects of success, and it's hard to know how those policies would pass through. So the consistency of monetary policy becomes more important when it's the one stable thing to hold on to as the fiscal policy ship rocks in these new winds. And so I think we're going to see an even more cautious Federal Reserve with one question mark, which is before his term is out, President Trump may have put 5 of his people, we saw the first 2 come already, onto the Federal Reserve, and he may have the ability to change the composition of the Federal Reserve Board of Governors as well.
So how is that likely to change, the mentality of the Federal Reserve, particularly decision makers coming from different parts of the United States to make that decision? Professor Liu, it's no secret. The tax cuts, infrastructure building, the trade deficit, all of these issues need enormous amount of political capital and energy. And of course, Washington just cannot afford it right now, given what is happening right now. So, Professor Liu, what would this mean for one of the United States' biggest trading partner, China?
Well, whether they really
I heard alongside.
That's right. That's a very difficult question, but a very good question, though. Yes, the world is really living in a very complex system where the change of one portion can really create a bigger ripple on the other. And given that the 2 largest economy interacting and counteracting in many ways, so China is looking at, well, number one, whether we are able to maintain at least the 6% growth rate, and whether we are going to really keep our currency more stable, and then whether we are able to really take a chance if the United States is there to roll out programs like the infrastructure construction. And then, whether China is going to take a better leadership in regional integration so that more productivity can be unleashed by working more with neighbors.
Yeah.
So it's really a counteractive situation. So I think from the Chinese elite circle, much is really there to be sitting and see, to be more reactive rather than taking active measures, because we are not really able to see, actually nobody is able to see what is really clearly lying ahead in the political landscape in the United States.
No, nobody can see it clearly. That is very frank and insight that you just had. But, Professor Wolff, people do see the opportunities. The opportunities at least go with the states, different states, individual states, they have their own trade and economic promotion policies. It also goes with the business community inside the United States, the community of innovation, new technologies as well. How much do you think the mentality and also the energy there will be able to help the U.S. trade partners to be more courageous in promoting more cooperation with the United States, even amid all of these political fights?
Yeah, so it's a very good question. I think we saw, particularly around the United States' somewhat rogue decision to be among a very few number of states to reject the Paris Climate Accord, that many cities and states, some regions of the country, and most of our leading international businesses have decided to honor those agreements, even if they are honoring them as a state or a city or a corporation, as opposed to a part of a U.S. governmental effort to honor that agreement. So I think we have a bit of a case study in what may be done. The problem with this being that the federal government asserts a lot of influence, both legally and also in terms of global opinion. And part of what I think American businesses and the global business community and the nation's states around the world are trying to figure out is, what is the United States doing? Because we often, not only are some of the signals from our present government a departure from what past governments have done, they're new. There's also a bit of ambiguity because we sometimes see folks in and around the Trump government, including President Trump himself, articulate one policy only to articulate a diametrically opposed policy maybe 24, 36, 72 hours later. So there's a amount of unsettledness here, which is unusual. I do think that states and cities will try to pick up the mantle, and whether the federal government will allow them to function that way is something we're waiting to see.
At the same time, Professor Liu, just to add to the complexity of the whole issue, you see the business community also is going through some transformation. We heard about new unicorn companies like Uber going through some challenges right now. It is quite a representative of that generation of the new and high-tech companies. Meanwhile, you also heard companies like GE, the longtime CEO has stepped down, even though he still remains the chairman of the board. So you see these dramatic changes in businesses inside the United States. Many of them conglomerates, multinationals, huge impact also on many of the economies around the world. What do you make from this perspective?
Well, I think for the U.S. leaders, I do need to give credit to the previous President Obama, that he really sees that there has been a general hollowing out of the U.S. industry, which is really the fundamental issue for the U.S. economy. And now I also need to give credit to Donald Trump, noticing that the infrastructure is really dragging the feet for further growth in the United States. And right now, whether they're really looking at a long-term view by navigating into the difficult, course, or whether they are going to have a quick fix. Yes, everyone is there to agree that there needs to be a tax reform, there needs to be health care reform, but so far none has really achieved to the general satisfaction of the political parties and also the general folks. And lastly, I think how to navigate the international relationship is the United States. They are really retreating from global leadership, or are they really going to present certain other format? So that's something that still remains to be seen.